Welcome to the Mortgage Rate Market Update for the week of April 30th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week, mortgage rates hit the highs not seen since August 2013. Now, if you take a look at the bond chart on the screen, you can see mortgage bonds have been selling off since the beginning of January. We did get into a tough trading range there. We were stuck in that, but then we broke through that 2 weeks ago and just been falling. The bond's been falling, moving interest rates higher. And then last week on a Wednesday, they finally found a floor of support, which is where they hit the highs not seen since 2013 for rates. And they were able to bounce off of that and move higher. And basically, that's a short-term trend for the bonds to move higher, moving interest rates lower. We had the U.S. Treasuries hit 3.04%, which was a line we thought they were going to move to. They hit that, backed off. So in the short term, we're looking for Treasuries and mortgage bonds to rally in terms of price, which will move the yield lower. That's going to be a short-term trend. We do expect that not to last. We're looking for mortgage bonds to break through that 3.04%. U.S. Treasuries to break for that 3.04%, which would move mortgage interest rates higher. But in the short term, you could float your mortgage interest rate, see if bonds can continue to recover in the short term, get you a little bit better rate. But be careful. They are going to switch. Rates are going to remain moving higher on the long term, so be careful because it could happen fast. But in the short term, cautiously float your mortgage interest rate, see if you can get a slightly better rate, but be on the lookout. If the bond market switches, quickly switch to a locking stance because it will resume mortgage bond selling off, rates moving higher. Now, economic news, let's dig more into that. Mortgage rates hitting the 5-year high. The Federal Reserve, who appear to continue their policy of raising short-term interest rates, that's going to be a headwind for mortgage loan rates. They're going to move higher as the Feds move short-term rates higher. Inflation is kicking in. Inflation is the enemy of bonds. That's going to be a headwind for mortgage bonds. That's going to be an impetus to move mortgage interest rates higher. The economy's doing well. That's going to pull money out of the bonds into stocks. That's going to be a headwind for mortgage interest rates. So all of these factors are pointing to a long-term trend of mortgage interest rates moving higher. U.S. Treasuries are going to continue their march higher, and we do believe they will probably break through that 3.04%. That'll be a headwind for mortgage rates as well. So everything is pointing to higher mortgage interest rates in the long term. Short term, yes, maybe float, get a slightly better rate, but long term, you got to look at rates moving higher. So if you're looking to buy or refinance, you want to do it now, sooner rather than later. We saw in economic news, gross domestic product GDP for the first quarter of 2018 was released, came in at 2.3%, which was down from the 2.9% in the fourth quarter. It was above the expected 2.1%, but if you look at the chart there, the trend has been for GDP to slowly trend down. Hopefully that can reverse course and get the economy back on track, because GDP is the broadest measure of economic activity for a country. So it reviews the goods and services produced in a certain time frame. So good number, not a great number, but it does show the economy is still moving along pretty good. Then we saw weak initial jobless claims come out on Thursday. They dropped 24,000 to 209,000 claims for the week. That was 21,000 lower than expectation, and that's the best jobless number since 1969. This shows the labor market's doing extremely well. We've got a jobs report coming out on Friday for April 2018. We're looking for that to come out very strong. That could be the impetus to move interest rates higher again. So you can float into Friday's jobs report, but we would recommend that by Thursday you might want to consider locking, because that very strong jobs report could be bad news for mortgage bonds. Now, in the housing news, a couple reports there. Big news, millennial homebuyer. I did an interview on the Daily Ledger show on One American Network. We're discussing how millennial homebuyers are the biggest group of home buyers now in the United States. We discuss why, what their challenges are, where they're buying, what's going on. You can check that out in the blog to see the interview with me and Graham Ledger. We saw existing home sales for March 2018 rose 1.1% from February to an annual rate of 5.6 million units, according to NAR's report. Now, sales are down from a year ago 1.2%. because of this continued low inventory problem. So the buyers are there. We got a giant group of buyers. We just have a real small inventory of homes for sale. Inventory is at a 3.6 month supply, which is well below the 6-month level we need for a healthy inventory. And this is the 24th consecutive month of inventory levels dropping. So not great news on inventory levels, but home prices are going to continue to appreciate as long as we have this low inventory problem. The median existing home sale home price was up 5.8% from March of last year to $250,400. That's the 73rd consecutive month of year-over-year home price appreciation. So the housing market still remains strong. It's still a great time to buy. It's going to be very competitive, but the sooner you buy, the sooner you can take advantage of those home price gains. Then we saw new home sales for March 2018 surged higher as we move into the spring buying season to an annual rate of 694,000 units. This was above the 634,000 expected and was a 4-month high for new home sales. Now they're up. New home sales are up 8.8% from March of 2017, and the median home sale price of a new home for March 2018 was $337,200. That was up 10% year over year. So new home sales report shows the number of newly home constructed sales by home builders for a particular month. So new home construction is doing very well. This low inventory is pushing up the home prices, and it's really helping out home builders. Now in the local news, we got the next first-time homebuyer seminar is Saturday, May 19th from 10 a.m. to noon in Newark, Delaware at the Christiana Hilton Hotel. And then we're in Wilmington, Delaware on Wednesday, May 23rd from 6 p.m. to 8 p.m. at Independence Mall at eXp Realty Suite 88. You can register for either one of those events. We give us a call in the office 302-703-0727 or register online www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.